Investors and traders, welcome to the channel Market Chart Pattern. Today is 17th of September 2023, and I hope everyone is having a great weekend. In this video segment, we are going to take a look at the key US stock indices, as we always do for this video segment. And this video is for educational purposes only and is not a financial advice. Before we start to take a look at the stock indices, we will actually also take a look at the debt markets, and we will review the US bond futures markets. So let's take a look at the 30-year bond future. So this is the T-bond or Treasury bond futures 30-year duration. What we can see is that price is just moving lower. Here, this is the daily chart of it. We were watching this 121.20, which because it was the 38.2% Fibonacci price level. And the price found resistance. Now where it is, we really need to be very careful in watching it, because if it begins to close below these lows of around 118, the price could actually move a lot lower. And the way it works in bonds is that if the price moves lower, the yields move higher, which is an indication that the interest rates might be actually moving ahead or higher. Let's also take a look at slightly lower duration 10-year treasury note. So this market is in fact bigger than the 30-year treasury bond market, and we see a similar kind of price action. We really need to be watching out for these lows around here and around here. Let's also take a look at the high yield corporate bonds. So this is also known as the junk bond market, and these are typical kind of bonds which are issued by issuers or companies or corporations which do not have a very high credit rating. So they like to come in this market and offer higher coupons to attract investments, meaning that for their lower credit rating, they try to compensate the investors for taking that additional risk by paying a higher coupon rate for their investment compared to, for example, a equivalent maturity treasury bond, as an example. So let's take a look at this on a weekly chart, and what we can see is that this market has also come down a lot lower. So clearly this is a bear market for this market as well. And also we have seen even in the treasury bonds, the price action has been negative for quite a long time, and it appears that the bond bubble has actually burst, and we need to pay attention to this market as well. It is just in a sideways consolidation at the moment, as it appears, but if it's gonna be able to take these lows out, because it relates to corporations, higher lower price means higher yield. There could be some impact on the equity indices as well, because of what's going on in the bond markets. Let's go back to the SPX chart. So this is the cash market. This is the longer term one that I like to take a look at. And what we see is that this is the pattern that we had identified several weeks ago. The price reached right at the 78.6% Fibonacci retracement, and we also had a one-to-one ABCD pattern completion, pretty much around this level, not exactly the top. And then we also had some expansion levels coming in around 45, 42. 1.272 expansion. And what we are seeing is that just the price rotate lower from these level, not able to take this out. Our anticipation was, if this price level is taken out on a consecutive closing basis to the upside, then chances were that we were in fact going to go and tackle these highs. That did not take place, so the alternative was that perhaps the market goes into a pullback or a correction, and this is what we are seeing at the moment. So the last a couple of weeks have been inside bars within the 28th of August bar, and we'll have to wait and see which way it's going to break out. So we'll try to get some more clues by actually moving to a lower time frame. But in terms of the pattern formation, one really key level that we are watching on the weekly chart is around 4300, which is the 38.2% Fibonacci retracement from this low. We can also arbitrarily draw it a little bit lower as well from this low as well. But I chose for the weekly chart just this one because this is where after a good pullback, the market actually started a nice up run towards the upside. And also from a market symmetry perspective, if we just copy this and bring this out, in fact it just goes a little bit lower to about 42.30 level. But we are going to take a look at this on the shorter term daily chart as well. So here on the shorter term daily chart, that's the ABCD pattern that I mentioned while looking at the weekly chart. We have this trend line right here. We have the 200-day moving average floating around close to this level as well. Where the price is close right at the 20-day moving average, but it's sloping down. So the price action that we have seen last Friday, if we are going to see more selling pressure, then it looks like the pattern that we are watching for is this one-to-one ABCD, which is likely going to take the index down to roughly around 42.70. We also have the this trend line nearby, and of course we have this 38.2% Fibonacci retracement coming in at 41.80. So it looks like if this pattern formation takes place, or there's going to be more selling pressure coming in, the real key level that we should be watching is around this 41.80 is the level that we'll be watching. Of course, we have these ABCD one-to-one price projections, we have the symmetry, we have the rising trend line, but they all kind of come together or form a confluence level around 41.80. So this 41.80, in my opinion, is a very important level to be watching should the price get there. Let's take a look at the Qs. So we'll just go back to the weekly chart. So the NQs, or the NASDAQ 100 futures, so tech stocks have been the one in 2023 which had been leading the market higher, the stock indices. In 2022, it was the opposite. The tech stocks were the ones which were leading the market lower. Perhaps they are more sensitive to the interest rate because these are fast growing companies which need quite a lot of cash flow for their operating purposes. Therefore, if their financing costs go up, then of course it will have an impact on the cash flow and their margins. And quite a lot of tech companies actually are not profitable because of their expenditures. And if interest rates or the debt servicing costs go up, it has an additional squeeze on it. Fast growing companies not profitable because everything is moving back into growing the company. So just my perspective on it. What we are watching in terms of the technical levels here is right here we have the 78.6% Fibonacci retracement. Then we had the 1.618 expansion coming right here. What we have seen pretty much similar to what we have seen in the S&P 500, the SPX chart. The market actually pulled below. We have this 20-week moving average in blue line. The price pretty much tagged around it. And here what we are looking at is the market is stalling around this level of 15,700. One additional thing I would like to point out is in terms of the market symmetry. When a pullback had happened, it was for this much magnitude, and if you project it from the top, the market came pretty much close to it, but not exactly. So let's move to the daily chart. So here in terms of the daily chart, the really key level that we are watching for should the price face more selling pressure is 14,350. So I'm just going to point this like this, 14,350. And the reason is because we have this one-to-one price projection ABCD. We also have the 38.2% Fibonacci retracement, 300 points lower though, but we also have a 1.272 expansion come in, and we also have another retracement value close by this. So this 14,350 is really a key level that I'm watching for. Should the price begin to not find support here, then we have further targets to the downside, and this is the 200-day moving average, which is around the 50% retracement. So that will be the next key level to be watched, around 13,400 roughly speaking. If this level gives way, we have lower targets as well, but in my opinion, this is 14,350 should be the one to be watched really carefully. If that doesn't hold, then we will begin to look at the market in a different angle, and then we could even have further targets towards the downside, certain potential support levels to be watching. Let's take a look at the Dow Jones E-mini futures. Here it had found support from 34,265, but quite honestly, this price action it doesn't look very bullish to me. And let's see if there was an ABCD pattern formation. So there we go, it became pretty close to that. So here, if these lows of 25th of August, they are taken out to the downside, we'll be breaking this trend line. We'll have the one-to-one ABCD price projection coming in, and we'll also be breaking this symmetry right here. So the index could see further a selling pressure, especially if this 200-day moving average is broken to the downside. Let's take a look at the small caps Russell 2000. So I am going to go and have a look at this on the weekly chart. So what we can see is that Russell 2000 has been just in a really long trading range, and it's just tested the bottoms here, then tested the tops here. It's in the middle of the range, but overall the price action is in my opinion bearish. So it looks like there is going to be further downside pressure. Also, we are in the month of September, and then we also have the month of October to come, and these 2 months could have seasonally. In the past price actions, we have seen some significant pullbacks happen in these 2 months, especially in the month of October. So there's a possibility that we could perhaps see some sort of a sharp pullback in the market place. So we need to be very vigilant and alert in the current market conditions. And if some of these price levels that we are watching, they begin to break to the downside in the key indices such as the S&P 500 and NASDAQ futures that we saw, NASDAQ 100 futures, then we need to, in my opinion, begin to tighten up our belt and be very careful of the market. So the month of October, for example, I did not want to go too much into it, but I am not a astro follower. But when we have certain events which are rather unusual, for example, we're gonna have a couple of eclipses come in the month of October, then I do pay attention. And sometimes the market action we have seen around these events to be rather bearish. So we just need to be aware of that, and we just need to be vigilant, and we'll be watching our price action and the pattern formations. And I will be bringing out or following up with you guys by bringing out more videos as the price action unfolds in the key markets that we like to follow in the US stock indices. So thank you very much for watching the video. If you found the analysis of value, then please do hit the subscribe button and also the like button. And if you find our analysis of the markets that we follow from a technical perspective, using the pattern recognition, Fibonacci ratios, retracements, expansions, extensions, the one-to-one projections, then please do have a look at some of the previous videos that we have done. Sometimes I do not cover all the patterns that appear on the screen because we have covered them in previous videos, but over the I will do a longer video at time where I will just go through those pattern formations one more time. Apologies again, the video is getting longer, so I'll just cut it short here. Thank you very much for watching the videos. Good luck and good trading.